So here's our economic update for October 4th, 2025. We had our interest rates drop by the FOMC. This went down by 0.25%. Basically, we're now in the 4 to 4.25% range for the Fed overnight funds rate. Now, if you look, this really impacts the short end of the yield curve. It doesn't impact the long end of the yield curve as much. So if you look at the 10 at minus the 2, we're now above 0.5. This is usually right before you're entering a recession. If you've already gone through a deep, basically inversion. So you can see that throughout history. The gray bars are effectively when we had recessions, and you can see it hit about 0.5% for that differential. The reason why they dropped the interest rates is there's a moderation of economic growth. That's fancy language to say that the growth is slowing down for the economy. The unemployment is going up, or it's more of a concern, yet inflation is still stubbornly high, but they're kind of giving up on inflation because if you have people that are no longer able to find a job, and about a quarter of everybody that's on unemployment has been there for more than 6 months. So if people aren't able to then pay high prices, you don't really have to worry about inflation as much because deflation becomes more of a concern if you're entering an economic downturn. September 30th, we got the JOLTS report. There's 7.2 million open jobs. Layoffs still remain low, which is a good sign, but about a third of CEOs plan to reduce their workforce over the next year. On September 5th, our last official jobs number, and I'll go through the ADP. This is not official data. This is an independent way of looking at the data, so I'll go through this next. But our last jobs report said there were 7.4 million unemployed people, and the unemployment rate was 4.3%. For those that are about 16 to 19, just entering the workforce, it was closer to like 14% roughly. And if you look at African American unemployment, it was about 7.5%. The reason I'm bringing these two numbers up is these two groups tend to rise in unemployment first, and then it's followed by other groups. So it's kind of a canary in a coal mine. The other thing is the hours worked have been going down over the last couple of years. There was only an average of about 27,000 jobs added over the last 4 months. You need about 80 to 100,000 jobs per month in order to keep up with the growing population. There's some arguments of, well, if people are being deported or taken out of the country, then you don't need as many jobs to retain the same unemployment rate. We were supposed to get a report on October 3rd. That did not happen because the US is currently in a shutdown, hence why I have to go with different numbers. So on October 1st, the ADP Employment Report came out. And one thing I always like to do is check back with this data versus the official data. So the official data that we had from the US government, basically Bureau of Labor and Statistics, was we had a loss of about 13,000 jobs, and that's been further revised. And I can see that there's still a loss of jobs in June. We had a gain in July, which is also represented in this report. This one's showing a minor loss in August, and it's saying September we lost about 32,000 jobs. Until I get the official data, this is all I can go by, and that's not just me, that's the Fed. So the Fed's going to have to make decisions based on limited data, so they're going to start relying on unofficial data, such as the ADP Employment Report. Inflation, so September 11th, we got our consumer price index of 2.9%, and our CPI core, which is just excluding food and energy, so that's 3.1%. September 10th, we got our producer price index of 2.6%, and core of 2.8%, excluding trade services, energy, as well as food. And the preferred method of inflation measurement for the Fed on September 17th, we got our personal consumption expenditures. They're up 2.7% year over year. And if you exclude food and energy, you're at 2.9%. All of these are higher than the goal of 2%. So I think Fed is basically saying, we're going to start dropping interest rates, and I expect them to drop about 0.25% each meeting. They meet again in late October as well as in December. So I would anticipate another 0.5% reduction in the interest rate over the next about 2 months. How's the consumer doing? September 30th, Consumer confidence is at 94.2, which is down. Consumer expectation is further down at 73.4. Anything below 80 usually means there's a recession ahead, but it's been signaling this since February of 2025. If you look at 26th of September, there was a consumer survey. Sentiment is minus 21% year over year. Current economic conditions minus 4.6% year over year. And expectations minus 30.5% year over year. So none of these are really in a good direction. September 17th, we have consumer spending. About 70% of the US economy comes from consumer spending. So this is where you want to see money being spent. So $129.2 billion increase in spending. Personal income is up 95.7 billion, and retail sales are pretty strong at plus 4.8% year over year. Those are all really good numbers. Just recognize that if you're spending 129 billion and you're only making 95 billion, there's a difference between those numbers, and you can't continue to spend more than you make. So where is that coming from? It's either coming from credit or savings. About half of the economy effectively lives paycheck to paycheck. So a lot of it's coming from credit. So we're seeing people, about 90-day delinquencies rising across all credit ratings. So basically people are defaulting on their debt. They're using credit, they're using loans, debt, buy now, pay later. And oh, by the way, buy now, pay later. That's now going to be reported on your credit reports. So that's going to potentially ding people's credit scores going forward. GDP. So first quarter was revised further down to minus 0.6%. So that was a slowdown in the economy. And second and third quarter, we had a change in the amount of trade that we've been doing, as well as there's still a lot of investment into AI. So we've seen a significant rebound in second quarter 2025 of positive 3.8%, and another positive quarter of 3.9% that's estimated at the moment, because we just ended and it's going to take some time to get all the revisions out. So when you look at this, you have positive and you have positive. If you go by the definition of a recession, or at least historically, more than 5 years ago, it was always 2 negative quarters of GDP. You have your first negative quarter, but we have a positive and a positive. Therefore, currently, we're not considered in a recession. However, the National Bureau of Economic Research, they are the only ones that can tell us whether we were or were not in a recession, and it typically takes 6 to 12 months after a recession to really say if we were or were not. They've also changed the definition, so you don't need to have a negative quarter of GDP. If anything has depth, breadth, and duration for more than a couple of months, say if the unemployment gets really bad, even though you could have positive GDP, you could technically have a recession now because the definition was changed. So it's a little funny, but I would say we're technically not in a recession by the historic sense. On October 1st, the US government shut down. We're now in day 4 plus. If you look at all the past government shutdowns, they've lasted typically between 1 and 36 days. The longest one happened in 2018. I would expect this to be something similar to 2018, when we had a lot of the same people in office back then as we do now. And this may get dragged out for a bit. It may also be used as an opportunity to lay off additional workers. So what happens during a government shutdown? Well, right now there's about 750,000 federal workers that are considered non-essential, and they will be furloughed without pay, so they're not receiving any paychecks. That could put a real strain on people, especially if they live paycheck to paycheck and have no savings. This is why I always talk about having 6 months emergency fund. Anybody that's deemed as an essential worker, they have to work without pay. So please be extra nice to these people. This would include some law enforcement. You have TSA, you have air traffic controllers, you have active military. You may find that if this drags out for a long period of time, what used to happen is, I think in 2018, a lot of people were sick and would call out. So the air traffic controllers wouldn't come in. And then that would cause a lot of ground halts at airports. So it may cause additional delays. But again, got to recognize that these people are not being paid for the work that they're doing. Typically what happens is after the government shutdown, many of the people get back pay. So while they were working, as well as the people that weren't working, they usually get paid once the funding is approved. Do note that there's no impact to your mail, Social Security payments. Also, funny enough, all of Congress's paychecks, they still get paid, but our military does not get paid. And our police and TSA and air traffic controllers are not getting paid, but the people that get to choose whether or not something passes, they continue to collect their paychecks. So let me know in the comments if you think that's fair. I think the two should be tied together. Medicaid stays, Medicare continues. WIC, SNAP, a lot of benefits continue, but if it drags out for a long period of time, what happens is those start to run out of funds, and as soon as they run out of funds and they can't withdraw more funds, that's where those programs run into problems. Do note that most national parks and buildings, like national libraries, museums, things like that, those typically are closed and you won't have access to them. Now, the last time around, the national parks were left open, but then there was a lot of vandalism, a lot of trash, and a lot of other issues. So I don't know if they'll open them again or they'll just keep them closed. So the leading economic indicators, talking for the US, September 18th, these have been in a further decline. This is basically due to consumer expectations, new orders, housing permits. We have a glut of new houses. Basically, there's about a 9-month supply of new homes and about a 4 or so month supply of existing homes. A balanced market is about 6 months. And if you have a lot of houses, why would you pull more permits? So if you notice, for the first time in, I don't know, pretty much ever, new homes are less expensive than existing homes, and it's just because they're trying to move that inventory. The other thing is we've been flashing 6 months of a recession signal in the US. Now, the current economic indicators, however, are still going up. So it means that, again, we're not currently in an economic downturn or recession, but it's very likely that it's around the corner. September 19th, the Eurozone, the LEI, this is no longer a recession signal, but it is still a recession warning. And I'll put the links to all of this data in the description below, so if you really want to go into detail, you can read the full report. September 25th, China leading economic indicators, they are still in a recession signal. If you look at September 23rd, India's leading economic indicator as well as coincident economic indicator, these are both showing strong growth, so that's still expanding. Some events that I thought were interesting: September 21st, the US had announced a $100,000 visa fee for H-1B visas. This is really going to hurt US tech the most, but it didn't take long because yesterday, October 3rd, the first lawsuits are going through in California and San Francisco. So this will be challenged in court and it'll get escalated to appeals and Supreme Court is my assumption. If you look, October 12th, this is the deadline for when tariffs on many things will go away, unless the US Supreme Court says that the tariffs are okay. But technically, tariffs are taxes, and the president doesn't have the authority to implement taxes on other countries. Taxes fall under Congress, so if Congress decides to tax more, tax less, or tariff, Congress is the one with the authority for tariffs and taxes and that sort of thing. So that was ruled illegal on most countries, except for on China, because it used a different rule. Same with aluminum, steel, and auto parts. But there was a 7-4 decision in an appeals court on September 4th or 3rd, and then that's going right now to the US Supreme Court. October 29th, the next FOMC meeting. This is where we'll decide whether or not we cut interest rates further. My prediction is we're going to probably reduce this by another 0.25%, and I think we'll do this again in December. So I think this will be, instead of 4 to 4.25, I would expect by the end of this year to be about 3.5 to 3.75% for the interest rates. for at least the Fed. October 1st, the US shut down, so there's a pause on all economic data. So I'm not going to get any more of this information until the shutdown's over. I would anticipate it's going to take a couple of weeks before people can agree, and it looks like people are digging in. The end of September, the EV credit expired, so there's no longer a federal $7,500 credit when you buy an electric vehicle. So that may impact some auto manufacturers. So with all of this information, what am I doing? Well, first off, I have an emergency fund. All my high interest debt is paid off except for my mortgage. I have about a 6 to 12 month emergency fund. I would say at least a 3 to 6 month emergency fund is what you want to have. And remember, we all start somewhere. So even if it's $100, $1,000, a couple $1,000, whatever that emergency fund is, if it gets you through, a car repair or something happens, it's better than nothing. So don't feel bad if you don't have 6 months to start. I didn't have 6 months to start when I was starting out. We all have to start from somewhere. What I'm doing with any money that I need in the next 5 or less years, I'm going to keep that into high yield savings and CDs. At this point, I'll put a lot of it into a CD ladder. The reason being is that if I think the interest rates are going to drop, and they are dropping currently, the high yield savings interest rates start to go down pretty quick because they follow the Fed funds rate pretty closely. Anything I don't need in the next 5 years, something that's further than 5, 10 plus years out, I'm invested using dollar cost averaging each and every pay, and about 70 to 80% goes into the S&P 500, and about 10 to 20% goes into an total international stock. Basically, that's VXUS. It's an ETF. And that gives me good exposure to all the big companies in the US, as well as those that are outside the US, like Taiwan Semiconductors, for example. And then the last 0 to 10%, I'll keep that in high yield savings or bonds. I'm starting to move into some of the government bonds because as interest rates drop, bond values go up. So when interest rates are high and they're looking like they're going to drop, I start to move into bonds. I have a call option for 2027 on some of the TLT, so basically government bonds. So if the interest rate drops significantly over the next 2 years, then the bond values tend to go up. So that's why I'm doing that. People also asked, why not gold? Why not silver, precious metals, things like that? So the reason why I'm not necessarily buying at the moment is because I have over $100,000 worth of gold and silver and those types of things. And I bought them back when silver was about $15 an ounce and gold was $1,400 an ounce. And I know they've gone up significantly. I'm not a buyer at this price at the moment because I have enough of that diversification. If I look back to when I sold my silver last, it was about 2011. It was over $40 an ounce. I sold off all my silver and I bought it back at about $15 an ounce. But again, right now I'm holding, I'm not selling, I'm not buying. The majority of my assets are in the stock market. If I feel as though things are getting pretty bad, I'm not going to pull out, but what I will intend to do is probably buy a couple of put options on the SPY. That way it gives me downside protection. But I like to buy it when the VIX is low because then I don't have to pay as much in the options premium. All right, well, thank you for watching. If you enjoy this and you like to learn how to make more money, how to save, and how to invest, this is a channel for you. Please subscribe. I have a free Discord channel that you can join. And if you want to support the channel, you can join the memberships. It's a couple dollars a month. But thank you for watching. Have a great day.